Hey everybody, good to be here. Back with you today. Get to know Schwab.com. We're going to discuss the Schwab.com website. Today we're actually going to talk about options, something I've never done on the Schwab.com website before. We haven't talked about those before. In fact, we'll get in and show you kind of some of the past topics we've hit, but I thought it would be an incomplete view of Schwab.com unless we hit up options at some point. So today's the day on that, and I want to welcome back in Mr. Kevin Horner in the chat, who's been doing double duty on chat today. We do appreciate him. And so as you have questions, feel free to type in the chat between Kevin and myself. We'll do our best. Also, be sure to follow Kevin or myself on X, formerly known as Twitter, @BrentMooresCS, at Kevin Horner CS. And just glad to have you here. Let me go through some disclosures here. And just a reminder that the information today is for general purposes only. It's not an individual recommendation of any security strategy or chart type. And options do carry a high level of risk and are not suitable for all investors. And I'll be looking at specific securities, specific potential trades. These are all example trades. They're not recommendations. And let's see, what else do we need to talk about there? Just realize all investing involves risk, including risk of loss. Okay, let's head on over to the Schwab website here. But actually, before I do that, let me just encourage everyone to subscribe to the Trader Talks channel on YouTube. On the Trader Talks channel, something you can do is you can always go to the playlists. And if you go to the playlist, so here's the Trader Talks channel, go to playlists, here's your various topics that you can go to. I'm going to go to schwab.coaching.com just to kind of show you. Last week we went drilling into the details of the stock, and we did top-down analysis, building a sample portfolio, retirement planning, bonds, different approaches to trading, fundamental data, screeners, charting, see a variety of topics. Today, though, it's time for options. Now, if you don't know anything about options, that's okay. I invite you to stay with me, and maybe you'll learn a little bit more about the website, and maybe it'll be an introduction to options. I'm not going to go super deep into options, but I would also encourage you to check out Getting Started with Options. Tuesdays, noon Eastern Time. Great class if you want to learn some basics on options here. Okay, so I'm going to go to, let's switch on over to the Schwab website, and it doesn't matter where you start. Let me just to make it easy for you. We'll start here on the markets. Strong day on the markets. 1 day returns. So yeah, 2.5% almost on the Nasdaq up today, and even the laggard here, the Dow, is up 1.2%. So big day on the markets. All right, just is kind of in reaction to the Fed announcement yesterday of a 50 basis point cut. And there we go. So let me start off with this. If you go up to, say, trade, there is the choice to go to options. You can just trade options there. You can also go to research and click on options there. And if you click on research and then options, this is the page you're going to see. And there's a whole bunch of different items on this page I think you may want to look at. But if you want some basic information on options, you click on understanding options. And it's going to, what are options? Why trade options? Now, I don't think this is a complete substitute for, going to the webcast, the Getting Started with Options webcast that I mentioned. But hey, it's a starting point. We also have an article library here. You click on that, you're going to find more information. Today's options market update, trader outlook, and information on managing short call verticals, and other information on options. So this is a little more in-depth. This isn't the real basic stuff, important stuff, but not the most basic stuff as compared to the understanding options website there. Now, options checklist. Let's click on options checklist. Let's just take a quick look at that. If you want to trade options at Schwab, or anywhere for that matter, you need options approval, okay? So if you want to apply for options approval, there you go. You got to click on apply for options approval. Obviously, you can't get options approval at Schwab unless you have a Schwab account, so you need to open an account first if you don't have it. But if you do, you can click on apply for options approval. They're going to ask you different things, such as how much money, how much experience you have trading options. Okay, that's a big factor. How much experience, what kind of risk level you're interested in. You know, if you're a super conservative investor that's interested in capital preservation, you're probably, you know, that's going to be a factor as compared to somebody who wants to be more speculative in the market. Okay, so you fill out for options approval and just be, you know, honest with everything you do, and then they'll give you a particular options approval level. We'll talk a little bit more about what is entailed with each options approval level in just a minute. But before I do so, let me just mention something about options. There's a bunch of different trading platforms with Schwab, right? There's the Thinkorswim desktop platform. This is probably, if you are an experienced options trader and you are a frequent options trader, I would probably suggest it's worth your while to get to know the Thinkorswim desktop platform, okay? And it's the most robust in terms of options capabilities. Now, there are strengths in the Schwab.com website that I'm going through today that aren't there on the Thinkorswim platform. However, in terms of options, this is kind of the premier platform. But there may be times, even if you are an options trader, that you're going to want to trade on Schwab.com. And so you can kind of see, this is the Thinkorswim. I'm going to scroll down a little bit. Here's the Schwab.com, and you can see little check marks on the different various things. Notice on Thinkorswim, you get option statistics. You don't get that on the Schwab platform. You have these options screener that you may want to use. Maybe, maybe not, I don't know. That is on the Thinkorswim platform. But there is a lot of stuff on the Schwab platform. You can place orders, deal with options probabilities, liquidity. You can chart your indicators, your studies, obviously fundamental analysis, in-platform live chat with options specialists there, okay? So there you go. So just, you know, try out the different platforms. You're not stuck to any one, and you may switch between them. Now let me go back here. Actually, I'm just going to close out that page and go back to where we were. Let's talk about those options approval levels here for a sec. Because what I'm going to do is I'm going to click on options approval levels. Now I actually have a few different accounts here on this. This is just a kind of a dummy account I have, and we have a few different ones, and this was the one that gives me options approval, and it's telling me, and you can see if maybe you've applied for options in the past, and you don't know what's my options approval level. You can go here. Just a reminder, this is I'll retrace my steps here. You're on research, options, and then approval levels. And then you can scroll down and it says on this one, it says my current level is this, okay? So that's a higher level. But on different accounts, let me do a different account here. It says this is my current level, okay? And so this would be level 2. It starts with level 0, okay? That's how they number it. And let's see, this one, it says nada, okay? Not approved for options in that account. If I want to apply, you know, I can apply there. That's an alternative way, I think, of doing it. Let me go back to this one though, okay? And you know, something else I should mention, and Wiley actually brings it up in the chat, and we always appreciate Wiley. Wiley's very helpful to us and a lot of you in the chat. And if you're watching in the recording, you won't see the chat, but Wiley says, online courses can help you learn as well. Yeah, I mentioned the webcast. I mentioned that Getting Started with Options webcast. We do have online courses for options as well. So check those out. But look, here's the different kind of categories here. This is options level 0, covered options, more limited risk. This would be options level 1, long options. So this would be long calls or long puts. Then spread trading, and then short uncovered. In fact, we have that's the highest level. And let's be honest, most of you are probably not going to be approved for short uncovered options, but you work your way up. And even if you're approved for it, doesn't mean you want to do it, right? I don't know if I ever encourage anybody to just do naked call options out there. Without, consider your risk, I guess is the point. It's not meant for me to recommend what you do or what you don't do, but all I recommend is beware of your risk. Okay, fair enough. Let's go to, and there's glossary and other stuff here, but let me just show you another page here. I think I brought it up earlier. Here's kind of a summary page of these options approval levels and what strategies you're able to do. And level 0 is more people will be approved for that than level 1. It gets more rigorous to be approved as you go up the curve here. I'm going to just chat that in our chat box there for those of you watching live. If you want that page, if you don't, you know what you can do. You know how I found this page? You can actually, I think, get it through the Schwab website. I just Googled Schwab option approval levels, and this came up. Okay, and it came right up with this nice, simple, neat, easy to view, nice, easy to view page there. Okay, and let's see. Was there anything else I wanted to show on here on this page? Oh, I wanted to click on compare strategies. So here's just another view of the same thing. I think you can see the different strategies and you can see the increasing stuff. I think this basically summarizes that URL I point out, just in a different view. You just click, it's a little bit more inconspicuous. Compare strategies, okay? All right, so there's that. Now, what I want to do, let me go back and let me just click on Option Strategy Finder. Okay, so this is just kind of an educational thing, and it gives me my option approval. Let me click on OK, and you can, if I click on that, it does basically the same thing. Another place to apply for options if you want, gives me the types of options there. But let me go back, and I actually went out of where I wanted to. Option Strategy Finder. We'll let that load. It's thinking. And if you click on I've read it, okay, now it's going to say, hey, what are these, what are options that may be appropriate for what your expectation is? So let's do a simple one. Let's say we're bullish and we expect a stock to go up. What is your opinion of the direction? I'm going to say I'm bullish, okay? Based on the answer of 1, what do you expect the magnitude of the move? How big a move up? Is it going to move up a little bit or a lot? I'm going to say I'm really bullish on something, extreme, okay? What's the expected velocity? I think it's going to go up quickly and fast and whatnot. And my current implied volatility is, we'll say it's kind of average. And the future volatility, well, I think it's going to go up maybe. And what level strategies are you willing to see? I'm willing to see them all. So then I'm going to click on OK. And it's going to come up. And why did it tell me nothing? It should give me a... I've done this before and it's worked before. I wonder if I click something different. Let me just do this. Let me try it one more time. I'm going to just try, say we have low volatility and we expect it to go up and I have higher risk. Let me click on OK. It's not options. It should ask, oh, this is what I did wrong, folks. I've done this before. Okay, I've done this before. show option strategies permitted in accounts approved for option level right there. Thank you, Mark. Mark typed that in the chat. Mark saw what I did. You got to pick your level. So I'm going to do options level 3. You don't have to do level 3, right? Look, you can do level 2, do level 3, level 2. So let me go extreme, and I missed that. I should have caught that. Let me do the same answers, and I think we'll actually get an answer here on this once we click on OK again. Okay, there we go. So now it's saying, hey, look, you can do these type strategies. If these may be more suggested strategies there for you that you may consider. Okay, all right. So there we go. That's all. You play around with it is all I'd say. You know, and here's the thing. This is kind of getting you started with it, but the reality is once you're a little bit more experienced with options, you may not need to, you know, go through this little questionnaire to do it. But don't do what I did. Make sure you don't miss that little button there. It's not. They should highlight, you know, mark that a little bolder or something like that in my mind. But anyway, let's talk about trading options. How do we actually trade the options here on Schwab? So what I'm going to do is I'm going to go and let's go to trade, and then I'm going to click on options. Okay, so I can go up here and we can actually just enter a trade right there. You know, actually, even if you don't do trade options and you go to trade stocks and ETFs, you can always change it right there if you wanted to. And you can go to options. Okay, click on a call option, click on a stock, and now it brings up an option. So even if you don't initially click on options, you can do it that way. Let me go back to trade. Instead of options, though, maybe what I would suggest, I mean, if you already have in mind exactly the option that you want to trade and you have the strike price and expiration date, then great. But otherwise, you may want to go to these chains. Okay, option chains are just a listing of different contracts that are available based on expiration date and type of option and strike prices. So I'm going to stick with we'll stick with Apple here. Actually, yeah, let's do this. Actually, let me. I'm going to switch, and I'm going to bring up a chart. How about of a stock just to refresh you? We can pull up a symbol. Here's Amazon. Okay, so here's Amazon. If I want to look at the full chart, I can go to chart and I can click on show more to make it nice and big for us. And we can look, and here I have a 20-day moving average. Oop, we'll snooze that. Don't want to restart my computer right now. And so here's our recent trend. I'm going to say we're bullish on this. In fact, this is not just going up. This is going up at a pretty good clip right now. Okay, Amazon. So let's take a more bullish approach to Amazon here. Here's our Amazon. So what I want to show you, I'm going to show you a simple options trade on Amazon. So I'm going to type in AMZN, and let's do a simple options trade. Now, you can, if it's just a single option trade, you can just go and go, well, look, I want to go out. We'll go out, 43 days. So I'm going to click on that. I'm going to go out 43 days. I'm just going to look to do a long call here. Okay, single leg option trade. You find you got your option chain. Your calls are on the left, says right there. Puts are on the right, says right there. And what you can do is you can just click on the ask price if you want to buy it. Okay. Now you may be going 57 days. I want to go beyond 57 days. Well, you can. You change that up here, okay? So I can go, well, I want to go out 120 days at least. Now, that's going to cut out some long-term options, such as leaps there. But it also helps, I don't know, shrink down what's on the page here. You can also increase the number of strikes here. I'll show 12 strikes, but if you want to, stocks like Amazon can have quite a few strikes if you click all. If you pull up the S&P 500, you're going to get a lot of strikes or NVIDIA, you're going to get a lot of strikes. Amazon, a lot of strikes though, so I'm just going to leave it at 12 here. And what I'm going to do is I'm going to look at an at-the-money option. An at-the-money option is just an option that is basically the strike price is closest to the current stock price. We're right just shy of 190. I'm going to go to the 190 call. I'm going to go to the ask price, and I'm going to click on that. And look what just happened. This popped up with a trade. Buy to open. Quantity, I got to put in the quantity. I'm just going to click the plus sign. Gives me +1, okay? One option. It gave me the 190 strike. It gave me the 190 strike because that's the ask price that I clicked on. Yeah. It gave me this expiration because that's the expiration I clicked on. And maybe I want to go out further. You can always change the expiration. If I want to go out to November 15th, I can do that. There we go. Order limit, I can do a market order if I want, although most options traders will trade not using market orders. Your choice, I guess. Limit order, there's my limit price, and there's a day order, okay? So then I can just click review the order if I want, and then it doesn't like this. Why is it not? The order cannot be placed. Order message is for details. Please verify the messages for. Let's go and see what we got here. I have no messages. Okay. Not sure why it's doing that, but that's. Let me just go back. Maybe I missed. Did I miss a field there? Let's go back. And zero cash. Oh, that will do it. Yes, indeed, that will. I don't have any cash in that account. Okay, so let me go to a different account, and we'll try this again. Sorry, I'm not super used to some of these accounts there. Yes, I'm broke here in this account here. You shouldn't be trading options if you're broke, I guess is the deal here on this. You can't trade options if you don't have any money, I guess is the deal. Let's do this again. Let me click on this again, and let me get my quantity up, and there, there we go. And then you can just review your order, and you can place your order in there, and then you send that. Order received. Okay, so they received the order because I actually have money in this particular account there. Let's go back here though on this because I want to show you what about more complex. We'll move up a little bit more complex order here. Let's pull up another stock here. Let's pull up another symbol. Let's look at Comcast, CMCSA, and they're my internet providers. Generally, they do a pretty good job, I'd say. Again, relatively bullish. Let's do a different type of trade. Let's make this, instead of a single option, let's make this a spread trade. Okay, or we'll make this a short option. Okay, we'll make this a short put. Okay, how do we do that? Well, we're going to do kind of the same thing. Let me go back up. Remember, we're going to go to trade. I'm going to go to the option chain. CMCSA, and we're doing a short put option here on this. Again, I can click, if I want to, on the bid price instead of the call price. Excuse me, the bid price instead of the ask price, if I wanted to. But the other ways, you can just go up to Trade Builder at the top of the page. Click on Trade Builder, single leg, and put. Okay. There's the option, okay? And I can choose my expiration date right here. We'll go out about a month. I can choose my strike price. I want to go a little bit out of the money on this and look at, we'll say 37.50. And I want to click on the action. It's a put. I want to sell to open because I'm selling. This is a short put. Quantity, and there's my pricing. And then I can click on continue. And There we go. And then I can review that order if I want. Just double check it, make sure you know what you got there. And same deal. This, I don't have enough trading account. I only have $2,700 in this account of cash. And this is a short put on a $40 stock is a $4,000+ obligation there. So this account's a little bit limited here. This paper money account or demo account is a little bit limited on what I can do, but that's exactly how you would do that. What about multi-leg? Okay, yeah, so we can do multi-leg trades. Now, George says in the chat, George is smart, George said, what about a short put vertical? That's going to limit the margin requirements on that, right? So instead of that $4,000 obligation, or we'll say actually not quite $4,000 because we've been buying at the strike price, it'd be $3,750 plus I'm not factoring in commissions there. So in addition, instead of that $3,750 obligation, which turns out to be $3,750, that is then add commissions on that. If I do a spread, say a short put vertical spread, I can do that $3,750, make that a short contract. I can make a long contract. We'll say, just for our purposes here, $35. I don't know what's actually available. We'll have to see that. The difference between those two is $250. There's a 100 multiplier on that. So that'd be about a $250 obligation on, or $250 theoretical max loss. If you do that, remember, short options can be assigned early though. Okay, short options can be assigned early. And so, you could theoretically be assigned on the short put, own the stock, and then, maybe you get out of the long put, or the long put expires or something and you own the stock, and then the stock could go down further. So just keep in mind, that's kind of a theoretical max loss, but that's not assuming you end up buying the stock there. But that would definitely limit that margin requirement per George's suggestion. So let's keep on doing that. In fact, let's look at an example. Let's look at a different example here. Let me go, and I want to let's look at another stock. Let's do more of a bear. We've done bullish examples. Let's look at more of a bearish example. Here's CVS, and all I'm doing for the bearishness, I don't know where CVS is going to go. What I do know is they've struggled. You can see that earlier this year they were up at $80. Now they're down to $58. Okay, and so if you're bearish on this, maybe you want to do a bearish trade. And, you can do a long put. Yeah, it could. Well, it's not going anywhere very fast, it seems like. I mean, I don't know, it may at this point, but for the most part, lately, it's been kind of this more sideways. But if you're more bearish and more sideways, want to take advantage of time decay, you could sell a call. You could do a short call, but we want to limit that margin, that risk, if you're even available on that. So we can also do a long call at the same time and do those together would make a long call vertical spread, okay? So I'm not, obviously this is not enough to get you expert in trading these strategies, but I just want to kind of introduce you to those. So that was CVS. Okay, I'm going to pull up CVS here. I'm going to click on that trade builder. Now, before I actually do the trade builder, what I may do is I may go, hey, look, I want to see my strike. So I'm going to go down to my option chain. I'm going to go out, look at about a month out, okay? And I'm going to say, I want to go out to, we'll say a 60, 62.50, 60 and 62.50, okay? That would say what we want the stock to do is we want the stock to be below 60 at expiration. 62.50 represents kind of a max loss at expiration. We don't want it to go up there, certainly. We don't want it to go above 60, really. But if going down would be awesome, going sideways would be great. Going up a little bit is even possibly okay. there. So this is kind of a higher probability trade from that perspective. And let's go back to that trade builder. So we said October 18th, 60 and 62.50. Click on trade builder. Now, is this a single leg option? No, this is a 2-leg spread. Now I could also, it actually has some popular ones here. I can just click on vertical call, okay? Or I could go to 2-leg spread. It should have the same thing. Vertical call, click on that. It's going to bring up 2 legs now. Okay, 2 legs now. And we said we were going to go out to October 18th, okay, on both of those. We said 60 and 62.50, okay, and I'm going to sell the 60. I'm going to buy the 62.50. This is a 74-cent credit on that. And one of each there, quantity 1, okay? But continue, and there's the trade. I can just review it, make sure you got your expiration dates as you want them. It's out about a month. You got your strike prices you want. Make sure the credit is looking kind of what you are looking for. Now, something I should mention is this. There is a bid price. Okay. We're selling this. Ideally, we sell it for as much as we can get, okay? As high as possible. Well, obviously, somebody's not going to be on the other side of the transaction. Someone's not going to buy it for as much as you want to sell it for. So there's a middle ground. The bid price is much more likely to get filled right at the bid price. I guess it's not a guarantee, but you know, by the time I send in an order and whatnot, but you know, much more likely to get filled at the bid price. If I can go to the mid price, that would be better, right? That'd be a nice, but it's less likely to get filled. One choice you have is you could say, look, I'm going to try and go in between those two. I'm going to try and go in at maybe 80 cents instead, or 79 cents or something like that. So click on review order, and then you could, if you wanted to, you got to say, you know, you got to check any messages you have, make sure you acknowledge the messages, and then you'd place the order. I'm not actually going to place that order because this is a very limited account I have here, and I just don't, can't keep on placing options in this really small account here. Let's do one more, how about? Okay, let's go something a little bit more complex. Here's what I'm going to do. I'm going to take a stock. Let's look at another stock here. I'm going to look at Starbucks. You know, this has been in the news. They changed their CEO. They've had some challenges. They are struggling with consumers who are, you know, resistant to price increases. The whole inflation thing has hit Starbucks and cut demand in their stores. That's not been great for them. They also have a kind of maybe more of a complicated menu sometimes, you know? So that's, the new CEO is going to try and tackle that. I don't know whether he's going to or not, but this gap up was when the CEO came in. But anyways, I'm going to go with a bullish sort of trade in that I want to do like a covered call. I'm going to do a buy right covered call on this. How do we do that? Okay. Buy right covered call. Well, let's do what we've done before. We're going to go up to trade. We're going to go to click on option chains, and let's see, Starbucks, SBUX. We'll pull that up, and I'm going to look. And by the way, to shrink these down, you just click on them. Just click on them. They go down. Okay. I'm going to go out and say, if this moves up a little, I want to bring a little credit in. I'm going to buy the stock, but I want to bring a little credit in enough at the same time. And George is saying, George is a party pooper here, man. He's saying I don't have enough money. That is true. In this particular account, I do not have enough money. That is true, George. You're right. That's a reality check from George, everybody. That is true. I want to show you how to do it anyway. even though I don't have enough money in this account. I'm sorry, but that's I got to work with what I got to work with here. So let's say I had enough money and I wanted to do this account here, okay? So because keep in mind, this is a covered call I'm talking about. And so how much money would I need? Well, I'm buying 100 shares of stock. 100 shares of stock is going to cost me 96, so not, 90, we'll round it, $9,700. Now, we'll bring in a little credit off the call we sell, so that'll reduce it a little bit. Say it reduces it, I don't know, $100, a couple $100. We're still probably looking at something like a $9,500 outlay on this. All right, so how do we do it? Well, I can go, first of all, you're on the option chain, pick the strike and everything you want. So let me go back to Starbucks here for a sec. If the stock shoots up maybe towards up a high back here, I'd go, wow, that'd be a nice, really shorter term move, around $41. It'd be a nice shorter term move. If it goes above that, great. Yeah, I'm willing to cap my gains, but I want to bring in a little credit there on that. Okay, so let's see if we can get anything at the $41 level. If not, we'll look at the $40 level. That's some recent highs that we've had on that. Now, you wouldn't do this trade, and this is not a suggestion, it's just an example. You wouldn't do this trade unless you were bullish, probably longer term on this stock though. The biggest challenge I've seen, the biggest impediment that people have when they do cover calls is they think about the premium and stuff, but they forget about the underlying obligation. You're buying 100 shares of stock. What's your risk? Your risk is that stock drops a lot in price. Okay, so let's go out. We'll go out 36 days here. See if we got a, I forgot what strike we were looking at. Am I on the wrong stock here? Oh, I'm on Comcast. SBUX. Okay, let's look at Starbucks. Okay, we're going to say the same thing. We'll say, if the stock shoots up a little bit, we'll say about $100. Is that fair? $100. We're going to see. Let's see what kind of premium we can get on that. I'm looking at the calls. Bid price about roughly $150 on that. We may be able to get closer to that mid price. There's my bid price. There's my ask price. Roughly $150 on that. Okay? Remember, don't focus just on that $150 though. If you're going to, and forget about the risk you're taking on that. So I want to do a covered call though. So 36 days, $100 strike. I need to remember that. 36 days, $100 strike. Trade builder. Buy right. Buy right. And I'm going to click on buy right. Now, notice what it shows me. It gives me a stock, Starbucks. That's the underlying stock. 100 shares, and here's my option. So I got to change my strike price to 100, and we said we were going to go out 36 days, so I'm going to have to change that there as well. Let me close this down. 36 days, 100 strike. Now, what's that price showing me? It's saying here, roughly a $95 debit. Now, Starbucks actually costs more than that. Yeah, we're going to spend more than that on Starbucks stock, but we're also bringing in that credit. And then what that's going to do is it lowers, it lowers basically our cost basis in this. I'm not using cost basis in the terms of a tax. You got to figure out the tax on your own. But I'm just saying the initial expenditure is lower, is less on this. Okay? If the stock goes down, then the stock will be worth less. Presumably, unless something kind of weird happens, the option will probably go down. It'll be cheaper to buy back that option a little bit. So it will help cushion the blow A little bit. Covered calls aren't hugely productive strategies because the best the covered call can do to help me is the initial credit, okay, which is, I don't know, $150 or something like that. Okay, that's the I mean, we could lose $9,700, gain back 150. I mean, realistically, I assume this isn't going to go to zero, but you know, I don't know where it could go. It could go down a lot though. So just be aware of your risk. In any case, that's your cover call right there. That's your buy right cover call, and then you can click on continue to place the trade. Now, I'm not actually going to do that right now because, as George pointed out, I actually don't have enough in this account to fund that. So I'm not going to do that. But what I wanted to show you was, is that trade builder and show you how to actually place those trades. Remember, you go to trade chains above the option chain. Let me just bring that up. Above the option chain, you want to be able to look at the option chain. And if you're just doing a long call or long put, you can click right on the chain. But really, probably the key to trading options here on the Schwab.com website is go to Trade Builder. And then what you can do is you can do your single leg options, long call, long put, or short call, short put. You can do verticals or two leg spreads, calendars there. You could do a diagonal call spread. George mentioned a poor man's covered call. Okay, that's kind of a colloquial term of a diagonal call spread, where instead of buying the stock, you're buying a call option and you're selling the call. You could do that. You'd click on diagonal call. It's like a three-leg spread. Butterflies. Okay, butterflies have a long strike, two short strikes in the middle, and another long strike at a different price. Okay, and so that's a three-leg spread. Four-leg spreads. What's going to be four-leg? Iron condors, iron butterflies, condors. Okay, and then in the combination, you have some others, trades, callers, synthetics. But keep in mind, most of what you're going to do, there's your buy right. Most of what you're going to do is going to be right here in popular, probably in those categories right there. Okay? All right. I hope that helps. That's options on Schwab.com. Remember, you have different platforms you can use. If you're an experienced options trader that wanted to trade a lot of options, I would recommend that you check out that Thinkorswim platform. But even if you know that platform, and even if you trade it, there may be circumstances where you want to place an option trade on Schwab.com. So you probably want to know the basics of that platform. Next week, we'll cover a different topic, probably not an options topic next week, but I thought to be complete, we'd do that. Make sure you subscribe to the Trader Talks channel. Thank you, Kevin, for helping me out in the chat there. Gabe and Chris, you're awesome. Thank you very much. And thanks to each and every one of you for joining me today. I appreciate you. And this is the last webcast of the day here. So we'll see you all tomorrow morning if you'd like, and see you next week as well. Bye-bye, everybody.